All right. Good afternoon, everybody. Event trader and being joined, of course, by options trader Brandon Mars for the first time in 2025. Brandon, Happy New Year to you. I guess, what's the rule on how late is it to say Happy New Year?
I believe from Seinfeld, I believe it's the 7th.
That makes that makes sense. But since it's the 13th, we're not too far away. Or it's the 14th today. 14th today, huh? And it's the first time we're talking, so I'll throw a quick one out to you, even though I don't mean it. If that. How's your holidays, buddy?
Oh, everything was great minus the fact that the Ducks got destroyed by Ohio State. How about yourself?
Well, I had money on Ohio State that day, so I was quite okay with the turnaround.
So this is
uh,
your fault.
trust me. That yes, most of my friends, I'd be more of the mush than the big winner in sports, I would say. But it was good. It was good. Just back up north and running around, kind of doing those things back down south now. And given the weather, it doesn't feel like I left the north, but I suppose doing marginally better than some of the other folks. I know talking with Jim today and everything, but yeah, it was good. So, just trying to get back in the swing of things, get 2025 underway. Amazed that we're already halfway through January now at this point, right?
Yeah, it's been a little weird too with the fact that we've had what 3 straight weeks with one day without trading. So it's a little harder to shake off the cobwebs these years.
Yeah, and it'll be 4 out of 5 with MLK next Monday, right? So, but we do have a full week this week at least, and a lot of good headlines that we'll be sinking our teeth into tomorrow. That get Q4 earnings season underway, and that should drive some volatility. I'd be curious to hear what you're kind of seeing in terms of volatility and price action in the first 2 weeks of the year for the overall indices.
Yeah, I mean, obviously, we've finally seen a little bit of selling pressure. Yeah, I think I mentioned this once or twice in the chat room briefly. I was kind of the mind frame that once the new year hit and a new tax year was upon us, that we'd see a little bit of selling in some of the frothy names, and we've definitely seen that a little bit. Obviously these interest rates are getting a little tricky, putting a little pressure on us. So, for me, I think it was probably long overdue. Probably some of the risks, potential risks out there were just kind of piling up, and people made some good money. And, you had some sectors and some areas of the market that were maybe just a little frothy. So, if the market goes down a few percent here or there, I kind of deem that as healthy market behavior. We start going down another 10%, I might change that tune. But for right now, it just kind of feels like we're doing what we're supposed to.
Oh, sorry there, Brent. I had the mute on. But yeah, out of curiosity, put call ratio's been running low, so really hasn't been any panic there. Are you seeing anything on your end on the options market that is perhaps slipping by people here?
No, I mean, we'll take a deeper dive into it on today's topic with just kind of some of the premiums and earnings. But yeah, it's been kind of interesting to see some of the put call ratios. So, for me, I've been trying to focus maybe a little bit more on some of the individual names just because, we are seeing some pretty big divergences out there. Even again, we'll dive into this a little bit more. Even things like some of the quantum names in certain days, you've got some of them up 20% and some of them down 20% in a day, it feels like. So, yeah, I've been trying to just focus a little bit more on the overall individual names as we continue in a pretty decent stock pickers environment.
Is there any particular sectors, just kind of going from a broader perspective, that has been catching your attention early this year? I mean, obviously the quantum names, they're on a lot of people's radars, but any others that might not be in the everyday watch for some of the traders out there?
For me, it's mainly been, I guess this wouldn't be a sector, I'll call it maybe more of a grouping, as some of the just the high flying names, the quantum names, maybe some of your big movers from last year in the space side of things like ASTS, LUNR, just again, names that got a little bit frothy. Those just kind of seem to be the fun ones to put a short on or buy some puts on these days. Your premiums are a little bit high, but you know when on the good down days, those have been very nice shorts to have in your back pocket.
Do you have a rule of thumb on premiums? Like, I mean, does it really just kind of depend on the stock, or is there anything that scares you away from
You
certain
know,
trades?
you Yeah, I don't have a set rule. Usually once I start seeing like 100+% on the options chain, I start to at least take some caution. Obviously 100% for some of the quantum names would actually be a little cheap these days. But usually once it gets over 100%, that's when I start to say to myself, well, am I going to see a big enough move in order to cover my premiums and to make some money. And then, sometimes if I dip my toe in the water and I take a shot at something and, all of a sudden I get a 20% down move in a stock and I don't make any money on the option because the premiums are so high, that's usually a pretty good indicator for me for the rest of the week of like, I just don't want to deal with this. I just hate being in an option and having a stock move 20% in your favor and you make a 10% return. It's part of how options work. So it doesn't come as like a shock to me or anything, but it comes more of an annoyance. So that's probably my main indicator right there.
Yeah, yeah. Let me ask you. I know you don't usually play the indices at all. Um, are you looking at any of your entering 2025 with a little bit more cautious tone, maybe further out, like some March puts or anything?
No, I haven't. I just That's kind of a game I've honestly never played all that well. Just I don't know. When I personally, for me, I don't know. Maybe it's just because I've become so in tune of just kind of becoming a day trader. Looking out into the future, is just not something that I've done well for myself over the years. And I tend to not do well managing options positions when they're longer term. I think there's probably another options trader or two out there that could probably agree. I just say, well, I've still got 3 months on my expiration. Well, I still got 2 months on my expiration, and then all of a sudden I'm kicking myself on that Friday that it expires. So just hasn't really been kind of where I've focused.
Yeah, no, that's perfectly fine. Real quick, just pointing out the market action here. Squeezed all the way up to 58.87 in the S&P, now about 42 points off the lows as they try to get a little bit of momentum going in. Some real whippy action. I don't know. The RSP, that's up 0.8%. Um, so getting a strong push on breadth. The NYSE breadth running at about 3.2 to 1. So that's definitely one of the things providing a nice push here. We've been talking about it all day. Some of the mega cap names are definitely one of the laggards there, and I think that glossed over some of the strength going on in the market. So a bit of a push here right now, Brandon, as we're chatting away. All right, let's talk a little bit about some of the names that have been in your wheelhouse here, Brandon, the last couple of weeks. Home Depot, that's one that a lot of people have been debating. We had that poll. I don't know if you saw the poll that I threw up on the site yesterday, trying to get a feel for sentiment around the name. A lot of questions about the California fires. Um, Out of curiosity, are you getting anything up by you in terms of smoke? I remember the Canadian fires and seeing smoke all the way down here in Wilmington. You getting any of that?
No, we're not. I mean, it's been your typical January in Portland, it's been pretty cloudy, so I might not even be able to tell. You start to get that hue and everything.
Right.
Not sensing any smell or any sort of smoke or anything like that. Not seeing anything in the skies, and Oregon's definitely not immune to wildfires itself. I can tell you when my sister moved out here a couple years ago, or when they were some of the worst, and usually when we get that big smoke up here, it's very, very clear to see in the skies. So not seeing anything at this moment.
All right. Well, that's good. But as for Home Depot, like I said, we're debating what the rebuild's going to look like there. How quickly will revenues funnel through to Home Depot? A lot of questions about that. Now, you've said multiple times you're not a fundamental trader, you're a technical trader. So why don't we take a look just at the charts and what you're looking at on that front? So you tell me, do you want me to throw up a daily, 5 minute? What time frame do you want to talk about?
Daily would be great. Thank you.
All right, we got it up on the daily here.
Yeah,
Fire
so
away.
as you mentioned, and I'll just kind of repeat it. The reason that I threw out there was yesterday there happened to just be a small descending triangle on the 5 minutes. So, again, just being a chart watcher, I saw a technical pattern as and that's what I was looking at. It wasn't any sort of thought as to the rebuild versus the rates. If I wanted to throw my quick opinion on there, I don't really know. I would think that the rates would take precedent over that, and that's just strictly over the fact that, obviously a very devastating situation in California, and obviously my thoughts go out to anybody affected by it, for starters. And, if I don't know how quick that rebuild's going to be. I mean, I've seen the pictures. I'm sure, like many others, and maybe people have better insights than I do. But from what I've seen, it just doesn't seem like people are going to be rushing to Home Depot anytime soon. So that's just my quick take. But again, this was all based upon a technical pattern. But I guess looking at the daily chart, to be determined because we still got some trading time to go here, but you got 3 straight days of upper wicks on that daily chart there. So, obviously struggling a little bit with that 20-day. I would imagine that in theory, the longer it stays below that and the more times it just kind of keeps rejecting off of those levels, that it would be prone to rolling over. We've seen a little bounce in the Dow, but it's definitely been the weaker of the names. So, these rates continue to climb, and I don't know, they don't really seem to be slowing down. And, if we get any sort of news on, tariffs or anything, Home Depot, I know that they dealt with that on the first go round. That might put some pressure on it too. So, yeah, again, I think the longer it sits there, the more vulnerable it's going to be to rolling over, and probably going back to even the 370-ish area. So again, I kind of like it as a short with the fact that there's a headwind and a tailwind to it right now.
All right. So, if you were looking at buying a put, where would you go? Would you go in that 391 area? You're looking down at 385. Any particular range that you're looking at for a put?
Yeah, I mean, if I'm talking about, looking at something on Friday, I'd probably keep it a little bit closer. I might consider the 390, and if it started doing well, maybe roll down to the 385. If I was looking out, a month's time, again, which is something that I don't do a ton, yeah, I would definitely go a little bit further out with the assumption that that would be under the assumption that it was going to test around that 390 area, and it was going to go test some of those lows in the 385 area before a potentially larger move. That's probably the strike I would look at if I was looking a couple weeks down the road.
All right. So we'll keep an eye out on Home Depot. So We definitely looking at the sentiment yesterday, Brandon. I think it was 50% of the respondents basically thought that it was going to be going lower or didn't have much of an interest. So definitely didn't see any signs of buyers coming in there. So I like that short call at Home Depot. Real quick question from Henry, California here, Brandon. He mentioned that you gave out some good information on NBIS. You put out a nice long call on it on Friday morning, launched after that call. He's just curious if you saw anything in NBIS over the last couple of days. Now, again, Brandon is more of a chart person than fundamental. So, out of, have you seen anything on MBIS? Do you think this is purely momentum or that bounce off the 20? How are you reading this?
Yeah, so after Henry had asked about that the other day, I actually added this to my watch list. I looked yesterday. I didn't see anything yesterday. I'm looking at it right now, though, and again, it's got some elevated call volume, and similar to what I had pointed out a couple days ago, a lot of big chunks. So a lot. If you look at the options chain, some of the big sales of today, 1,000, 750, 500, 500, all on the call side of things. So, if you're talking like somebody bought 1,000 of the January 33 and a half calls at 345 a piece. So, that right there alone, I mean, that's a $345,000 options trade, which, to me says that that's not retail. That's that'd be a pretty decent sized stock trade for a retail person. And it would also be a pretty big trade on the options front. So, I mean, I'm seeing there's one, two, three, four, five, six, seven, eight transactions that are over 500. Some of these are spread trades, so you just keep that in mind. Just kind of how they show up. But yeah, I mean, this looks to be some sort of institutional buyer that, for a second day in recent memory, is building some pretty sizable options positions here.
All right. So next up, we'll talk about Honeywell. It's been an interesting name for discussion in the room. Talked about this as quantum computing play here, but there's also a lot of other big factors going on. Break below 50-day moving average certainly coming into play here. Had that big spike yesterday, and then up through the 10 and 20, and then that nasty reversal. So, what are you seeing in the Honeywell chart?
Yeah, never necessarily love those reversals, but this is one I have on my list on a regular basis and take a look at it and don't trade it a ton, but just to know what's going on in the industrials world. So looking at it after the news with the aerospace division yesterday, it seems as though probably no surprise that this will potentially happen. So I don't think it was necessarily earth-shattering news per se, but put it on my radar at least. And you had that inverted hammer candle on the daily. I kind of take the setup a little bit with a grain of salt that the big upper wick that created the hand or the hammer was on some news as opposed to just kind of normal price action. But then on top of that, you had the industrials that had a pretty strong day yesterday. Had some really strong performances from some names like Raytheon, or excuse me, RTX these days. They got a huge. I used to work in Andover, Massachusetts, and to drive to my old mutual fund job, I would have to pass a big Raytheon building every single day. So they'll forever be Raytheon to me. Um, you had Deere put up some a big number, so you saw some impressive performances there. The sector as a whole. So, you kind of got that little bit of a dip down over the last week or so. Kind of, you could maybe argue one of those trend lines that would be, kind of a little bit easier to break. You could maybe make that argument. you got the hammer candle as a reversal, and then there wasn't anything like a stop the presses type option activity on it yesterday, but there was definitely some elevated call buying, probably no surprise. Seeing it again a little bit today, so I thought it would at least be worth throwing on the radar. And I don't know. I guess the market makers decided that maybe if there is good news, they wanted to beat it down one more time this morning. So they did a pretty nice job of that. But definitely seeing that nice bounce, and it's definitely trying to retake that yesterday afternoon consolidation after the pullback. So still kind of looking at it, and kind of eyeing that 220 level at this point.
All right, we'll keep an eye out on Honeywell. Another name that you follow, and you follow this one closely all the time, Tesla, TSLA. Just pulling back to the daily on Tesla there. Um, Hearing that him and Bezos and Zuckerberg are all going to be front row at the inauguration next week. Obviously, being known as the first buddy, talks of him taking over TikTok, pretty much the world at this point. It sounds like Tesla stock. What are you seeing in that, Brandon?
Yeah, so I mean, on the daily, did see a rejection right off of that 20 earlier today. So, I think that's worth noting that it rejected pretty quickly off of there. But this morning, the first hourly candle, pretty, almost textbook shooting star candle, and it was on some decent volume. The first hour traded about 18.5 million shares. Just looking back to yesterday morning, about 12.4 in the first hour. Yes, again, when you find those reversal candles, you usually want to find them on the higher volume. So we saw a little bit of that there. And then, yeah, just real nice reversal back down to actually real quick, fairly. I was watching it real time. I mean, it felt fairly solid on the selling on the way down. Kind of caught itself at the 404 area, and it's seen a little bit of a bounce here, but again, it just doesn't seem like there's a ton of enthusiasm on this bounce to me. And I don't know. I think that 400 level is gonna start coming back into play with I don't know. I guess the asterisk that who knows if Trump's going to arrive at the inauguration in some new flying Tesla or something.
That'd be impressive, all right.
I mean, you never know what he has in his back pocket between SpaceX and the technologies they
I'm
have.
just having a vision of that. That would be funny. I would send the stock up high. One would think. So anyway, we'll keep an eye out for those flying Teslas at the inauguration for sure.
Yeah,
So
and I guess one thing, I guess I'll get a little fundamental again. And I don't know what's going on. There's been a lot of conflicting reports around the TikTok thing. It seems as though, I don't know, Musk is probably trying to buy the thing, but there's also being pretty, kind of adamant that it's not for sale to him. Regardless, it just seems like if it happens, it's just another huge distraction for him and for Tesla.
yeah,
Obviously, his purchase of Twitter did not exactly go smooth at the beginning. Add in a potential platform that has political implications with China. I don't foresee it just being smooth sailing for him, and I don't know, it just feels like another distraction to Tesla. Again, I could argue on the other side what's lifting it. So, little seesaw there of different things that we could talk about on Tesla. But that's just kind of how I'm thinking about it at the moment.
yeah, and I mean the TikTok thing. I just kind of get the feeling that Musk's name's just thrown in there just because a little clickbait going on and all that stuff. But we'll see how that follows. But yeah, I'd agree. I don't know how you could cut all the expenses around the country, throw out satellites, throw out rockets, and run a car company all at the same time. But seems to be doing it, I guess, right?
Yeah, so, I know you're a big fan of those viral TikTok, dance videos. So hopefully for your sake, they don't cancel the app.
I like to create them. I like to create them for sure. I was reading something about the Red One app or whatever. That's kind of interesting. I'm gonna have to take a little bit of a closer look at that, but that seems to be even more like based in Chinese culture than TikTok or whatever. So I don't know, but according to my 13-year-old cousin, TikTok's for losers anyway. So we'll see. But all right, let's take a look at another name that's been pretty hot in the room. IONQ, that you've been following pretty closely here. Naturally, a pullback in those quantum computing plays. This thing had gotten all the way up to $54 there. Now, trading around the 29 area. What's your thought on this pullback?
Yeah, so what kind of caught my attention today, again, kind of, I guess my first thought of a go-to for a put when the market's really getting smoked is kind of some of the high flyers. And I was just looking, and I know Scalp Trader had pointed it out earlier too. Nice bounce in some of the quantum names. I mean, looking at a couple of them, 20% plus, and this one came under pressure. And what I found was that to be a little more interesting because they actually did land a new contract yesterday, and it was $21 million, which I looked at their balance sheet briefly, which I can't remember the last time I did on a company. A $21 million
Yeah,
dollar
I
contract.
want to stop the presses here and talk about the balance sheet.
Yeah,
But go on.
they're not pretty in most cases.
No, no, no.
But
Well, when you see a company with what 30 million in revs and a 30 billion valuation, that always is going to raise a little red flag, I would say.
yeah, that's kind of why I think they're a great put when you have that day. Obviously today I sound like an idiot if I tried to, buy a put on RGTI, but when you have those big down days, I think that's why they're the perfect candidate. So, it flipped over into the red today, and there were a couple of bouts earlier in the day where the selling kind of came in pretty quickly and was kind of strong. So. I just thought it was interesting that this one wasn't bouncing. Obviously it's seen a bounce now with the rest of the market, but kind of again one of those trend lines that I feel like can kind of easily be broken. I'm looking at the 5 minute right now, so coming into that 30 level, I think at this point I'm kind of looking to see how it acts at that level. Um, Obviously too, if we continued to get a spike, we got the 10-year at the 4.8 ish level. If that continued to move higher, you'd think that as a pullback or as a market pullback candidate, that this would be kind of a good one coming into that 30 level.
All right, Brandon. Yeah, 30 is certainly an area we want to watch. Speaking of watching, real quick, Treasury budget is out here as the market was rallying into it. Now, it should be interesting because obviously we are concerned about those yields. Deficit coming in at 87 billion. The consensus was for 75 billion. Um, Budget outlays coming in at 541 billion, below the 559 billion in December 2023. Receipts 454 billion versus 429 billion in December 2023. So this is a tempting spot to lean on this rally attempt. Let's keep an eye out on that price action. All right, Brandon. So we went through any other names that you wanted to point out. We
No,
hit
I
your
think,
list, right? So
yep, you got everything.
all right. So that's gonna pull us into the 2020 or first topic of 2025, and should be an interesting one because we're going to be talking a little about earnings and some of the implied volatility that you're seeing, Brandon. Pretty interesting notes that you have here. So why don't you start going through that, and I'll probably pepper you with a couple of questions.
Yeah, so kind of what created this idea was obviously the upcoming earnings season where you get to be shackled to your desk in providing us with those great notes that you always give on all the earnings. So we appreciate that.
Always shackled to the desk, Brandon.
So, um, There was a brief report. I didn't get access to the whole thing, but there was some headlines about a report out from Bank of America that options traders expect individual stocks in the S&P 500 to move 4.7% on average after reporting earnings, which could create the largest earnings day moves on record and one of the more volatile earnings periods in history. So, just probably again, no surprise, like we were kind of talking about. You've got some frothy areas. You've got some companies in the quantum computing space that have generated $20 million in revenue and are now, now worth the value of Tesla. So, kidding on that,
Future.
but yeah.
You're
So,
not far off though either.
so, um, and last night I was kind of just looking at a few of the names and saw stocks like Meta, Tesla, Amazon. They're already at 70% plus on the current IV percentile. And I would expect that to climb as we get closer to the actual release date, as they usually do. Meta in particular, I mean, current IV percentile, 85%. So, definitely some steep options prices. So, we've talked about this before on earnings, and again, not my specialty by any means of kind of looking down the road and picking out earnings dates. But, if you were planning on making a play on something, it might not be the worst idea to consider doing it now. And, if you went and you bought some options right now, and in theory, they would become more expensive as you got closer to the earnings. Obviously it would be contingent upon if you bought a call on something that it continued to climb and the options premium would continue to climb. You actually might be able to make a quick buck or two on something, prior to the actual earnings release. So, yeah, again, it's not really a game that I play, but if you have some thoughts on some individual names on the earnings front, whether long or short, probably not the worst idea to consider making a move on it now.
Do you have like kind of a rule of thumb on how far out you try to play these options in front of earnings? Like if it's under 2 weeks, are you like, it's too close, it's going to be too rich?
I mean, we've talked about this throughout several different segments. The options market's not stupid. They know when a dividend's out there, so you're not going to be able to really be sneaky and go and buy a put in anticipation of it dropping. I'm pretty sure that some market maker out there knows exactly when the meta earnings are. So, they already start to get rich. I think when you really get to the point of like the week of, that's when it gets to the point where it's just like, all right, you know, I'm thinking that, the pricing on Meta's saying it's going to move 10%. I think it's going to move 20. I'm going to roll the dice. But, that actual week of is when you get real nice and frothy on your prices.
All right. I'm going to fire here, Brandon, on a short in the markets. I had that run up just below 5,900. Was waiting for a test of 5,900. But that treasury budget, I think that's going to kind of bring in a renewed focus on yields. Obviously, a good portion of that is going to come from the interest expense and kind of give everybody a reminder watching the 10-year. 10-year continues to battle around the 480 area. But all right, let's move back to our discussion here with Brandon. So, Brandon, is there any particular, when you're looking at the implied volatility, is there any particular area that you're seeing greater greater volume and a little bit of a wider spread? For I would think tech would be seeing a wider spread than say energy, but just kind of curious if you noticed any breakdown along sectors.
To be honest with you, I haven't done a deep dive on that, but yeah, you'd be correct. Tech, obviously, with some of the valuations and expectations, is where you're going to see kind of some of those really really big numbers. Especially, some of these frothy names I was looking last night, like in the quant computing space, they haven't, at least they don't have it posted in Thinkorswim yet when the earnings dates are. But those in particular, I mean, you're probably going to start seeing like 400 or 500% type premiums on some of those. So I think that's kind of where it lies right now.
Now, would you say the spreads are getting a little wider? I mean, is this more retail money coming in and perhaps throwing more out of the money puts, or do you think it's just because of some of the volatility that we saw from last earnings period, where there was really a breakdown of winners and losers that led you just saw extensions both higher and lower depending on what the reports did. So therefore, that's leading people to go more out of the money and thus rising the implied volatility.
Yeah, I'm sure the ongoing new retail investor that loves to play the options world is playing a role in that. But I also just think too that it's probably in the institutional space, right? I mean, we're kind of at a crossroads in just the market, and not to sound too dramatic, I guess the world, right? We got a new administration coming in. We've got changes afoot. All the different headlines that we're dealing with right now, and some of these
Yeah.
valuations, and I think also too, you've got situations where some of these institutional managers have, they've got their large allocations these days that they've done well on, and usually when people start to do well, kind of like we saw at the or excuse me, at the end of the year, you start to saw a little bit of a tick up in the put call ratio, and some of that I think is just also a function of people buying protection. You
Right.
you probably enjoyed your holidays last year if you were a fund manager, and you kind of want to not let that ride end so quickly in 2025. So I think it's also just kind of protecting yourself in case that big high flying stock that you hit a double on last year all of a sudden goes down 20% off earnings.
What's the general price action you see in calls and puts following earnings? Do you see a big reduction in the premium? Does it usually take two or three sessions where you start maybe dipping your foot in, looking for perhaps you think that it was an overcorrection in a name, or that the market simply just got the story wrong, maybe selling off on guidance that could prove conservative. How do you approach post earnings for trading options?
Yeah, so the volatility crush that you just mentioned, from my experiences, the market makers have been very good at creating that volatility crush about 3 seconds into the market open the day after the earnings report.
Yeah.
Um, if a quantum computing name reaches 400% on its premiums and retail buyers are buying it up and the earnings report comes out, they're going to do their best to bring in those premiums. So it will happen right away, especially at such elevated levels. It will obviously stay that way for a little while, just because again, the have the opportunity for that post earnings volatility. But again, one of the reasons why we start to see a stock trade flat after too, because they're just killing off the premiums. So for me, and that was actually another thing mentioned in this article, is Bank of America feels that this earnings season could continue the great environment for stock pickers. I totally agree with that. And for me, as have mentioned, that I rarely trade options into the report. One of my favorite things to find is, I don't know, let's say something gaps up and takes 2 to 3 days and creates like a little flag pattern. That's when I would prefer to hop in. Your premiums have come in. If you've had a Friday roll by, you've had an options expiration, get rid of some of those games. It's just a little bit more normalized and the patterns come to fruition. So I guess if you don't want to trade the actual earnings report and play the guessing game, I think there's going to be a lot of great setups post earnings, both on the long and the short side. So, I guess patience is key in certain cases, and I don't think it would hurt this season if you don't want to play the guessing game to just wait and let the dust settle.
All right. Let's say you do want to play the guessing game. What are some strategies you would suggest? What are some strategies that you would avoid?
So, kind of going back to, there's a few different ideas that a lot of traders use. We've talked about some of these and how they can be applied to earnings. One thing, straddles and strangles. I like that idea because the premise behind it is you buy a call, you buy a put, and you just are hoping for an outsized move, and you frankly don't care which way it goes. That's how a lot of traders will utilize these strategies for earnings. I would warn with these anticipated very, very high premiums is, you're getting a double whammy on your premiums because you're buying on both sides. So this earnings season seems like those are going to need to make even more outsized moves. So, I just, again, we've talked about these in the past. It's really frustrating when you go long and short and it moves 10% and you don't make any money on your trade.
All right.
Um, And then, yeah, again, with these high premiums, in theory, this would be a time to sell options. Again, every time I think I say sell options, I always say
Well,
there's a lot more
disclaimer.
that, yeah, there's a lot more that goes to that statement. But some traders will tell you that in theory, when option premiums are high, that's your time to sell them. So, in this case, you limit your upside, but a spread trade might be interesting in this environment since you're purchasing one option and then you're selling another to help offset those costs. Or, kind of going back to like the institutional fund managers, if you owned a large stock position and you were nervous about the results, now would probably be a good time to consider a covered call to collect some of that, high premium. Again, obviously, if you go and write a covered call on a stock and then it soars, your covered call is going to be underwater and you'll have to, take your losses there and adjust accordingly. But, in theory, if you wanted to protect your position and take advantage of market conditions, a covered call would be something to look at as well.
Okay. And again, naked shorting. You just, it's not your cup of tea. Um, Something that you just simply warn against, right?
Yeah, so this just kind of speaking of selling options, and this kind of stems from a comment that I saw in the chat room yesterday. I just wanted to address real quick. So it was about doing a naked short call on RGIT versus shorting the stock because shares are not available. So again, every trader has their style, their risk tolerance. I'm not knocking anything that anyone does by any means. But I did just want to point out because I know we're always getting new subscribers and people that are new to options. The risk. Naked calls are considered by many as the riskiest option strategy out there. And you add in a volatile name like RGTI, and it makes it even more risky. So, obviously just shorting a stock in general, there's a high risk involved with that, but just on the naked options front, there is unlimited risk and you can seriously get hurt in that situation. Today's probably a pretty good example on my kind of high flyer list, and I'm sure everybody else's is different, but our GTI happens to be the leader for me at about 40% up on the day. Obviously, you wouldn't want to have a naked short call on that today. That would that would hurt. So again, I'm in no way. One thing I've learned is never knock what another trader's doing. If it works for them, you know, that's great. I have my styles, you have yours, but again, just for some that are new to options, I just really wanted to just make sure to point out the risk of that particular trade.
All right. So, Brandon, then just kind of circling back with earnings, what are some of the things you're going to be looking for in terms of price reaction um, to beats, to misses? Is there anything that you are focusing on, or are you just going to kind of sit back and just soak it in as it comes?
Well, I didn't even get a chance to use this on our first segment of the year. I mean, I'll probably look for Marabozos,
Uh-oh.
There's one of my favorite setups would be something that, opens up and from the minute of the open, it just climbs, right? And you get that nice solid candle either to the upside or to the downside. And in that case, depending on the report, I think you'll get some situations where you kind of get that day two follow through and it just kind of continues to rocket. I would say that on the downside, like if you got one of these names where all of a sudden a company with $20 million in revenue that has a $100 billion market cap comes out and gives like a profit warning. Well, if you saw a bearish Marabozo on day one, that might be an interesting overnight lotto to take a put on for day two follow through. So, kind of like seeing things closing at either the highs or the lows of the day, and either take a shot on it then, or again, what I like to wait for is maybe some sort of flag pattern. Call it 3-4 days of consolidation. Kind of holds the upper half of the move up, and then that's kind of where you look for your short or long entry.
All right. Real quick out there, headline coming out CBS. They're reporting that Israel and Hamas have agreed in principle to a ceasefire draft deal. There's been a lot of rumors about that. So just kind of keeping a close eye on this for that short, too. Don't want to get squeezed out on the headline. One has to wonder if some people were aware of this, thus leading to that little pop. I don't think that it's necessarily going to lead to a big buying opportunity on that. Again, it's been rumored for some time, but just wanted to let people know that that is making the rounds. All
Yeah,
right.
I would agree with you. I think the potential raise in rates off of the budget info would probably be at least to me, the bigger headline right now than what you just said.
Yeah, especially since this has been kind of priced in all week.
Yeah.
But certainly keeping an eye out on it. It could be enough to just shake out some shorts and keep the momentum going. So I'm going to stick around in the short for just a little bit now, but definitely keeping a close eye on this price action here. All right, Brandon, anything else you wanted to touch upon while we have you here?
No, I think that's about it. I guess I guess get ready for for the craziness here. Plenty to keep us on our toes here in the next couple of weeks.
Yeah, yeah, definitely promising to be a volatile start to the year, to say the least, right?
Yeah.
So, all right. Well, hey, Brandon, thanks for coming on. We'll be posting this segment here as well as Brandon's notes in a little bit. And I'll also actually post the replay of Carmine's piece from yesterday, too. So, and naturally keeping an eye out on this price action going on into the close. All right,
Thanks, Kevin.
Brandon.
Appreciate it.
We will talk to you later, buddy. Thank you
All
very
right. Take
much.
care. Bye.